What's up, guys? Welcome back to another episode of Rawstocks. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow, being the final day of the week. Maybe even taking a look at where price is likely to head into next week. So before we get started, don't forget to check out the description below. There's some links to the Discord and some other ways you can support the channel. Still currently have a few of the free 30-day premium Discord membership coupons for the premium membership upgrade at wap.com. So let's dig into the charts here. We've just had this aggressive selling ever since the very end of December, and we've barely seen any relief, at least through the daily. As we drop down into the 1 hour, you can see we'll have some engineered liquidity targets, but on the daily it just looks uber bloody, right? It's just been dropping and dropping and dropping. We have some gaps, we have some liquidity voids in here, around 224 up to 225.75, and then we have some fair value gaps all the way, down through this entire move. But a lot of the question is where are we going to end? So I want to take a minute to just take a look at this and see, kind of what the final destination here. As you can see, the RSI, has gone into oversold territory, but we all know that doesn't mean that just because it's oversold means it's the end. You can see back here, we hit an oversold, caught a little bit of a bounce, and then had about another week worth of selling as we hit a lower low on the RSI as well. And so, just because we're oversold here, we haven't crossed back over the average line or the control line. And so no reason to think that the selling has ended quite yet. Now, on the positive note, we are kind of approaching this final destination of internal liquidity from the way up, right? It's sell side liquidity here that we're targeting. And so we could be looking at either last down close candle before the move up, right there. We're inside of that. Haven't quite hit the bottom of it. It would be 207.99 maybe. 207.99 on price for it to get to the bottom of that. But then we also have the very final little wick in that candle that went a little bit lower at 205.72. So there is a possibility that we finished the move there, failed to deliver, see a bounce up, failed to deliver on the external liquidity, see a bounce up from there. Where would we likely head? Possibly up to 230s. And then we might see a final leg down to take the external liquidity and set a lower low there. But we're not quite there yet. So we'll just have to be watching to see if we catch even a little bit of relief. Again, back here when we were oversold, after a nice, a very aggressive sell-off as well. We caught that bottom, we caught a 2-day bounce. And then we sold off again. So maybe we see, bounce into Friday, bounce into Monday, and then we got earnings coming up where it could continue to take out that final bit of liquidity that would take us down into the mid to low 190s. So we'll be watching to see if that happens. But right now we're inside this order block. Order blocks can act as support. If we find buyers in here, again, we could see this rally back up to the 230s, maybe even higher. So let's drop down into the 1 hour chart. I'll show you all the different levels of liquidity that we're looking at as far as buy side targets go. So the first one's going to be back at this old high, 219.26. That's our 1 hour high time frame liquidity for those who are day traders. That we'd be looking once we see for sure that we're catching a reversal. That'd be our first target is 119.32. Then we have the wick high here at 223.54. And then as you zoom out, we can see there's kind of buy side targets all over the place. We got an order block in here at 235.87. Got another order block here. It's a small swing at 241.31. Right, another order block here at 242.57. Another order block here at 251. And we got 255.88, and then ultimately we got back at this high at 265. So when we do start heading higher, we're going to be looking at targeting all those different peaks, the order blocks that rest in there. We also got a lot of different fair value gaps. There's a nice fair value gap here before we dropped at 233 down to 231. Another fair value gap down here or up here at 240 all the way up to 244. Another good one here, 249 up to 251. and then another good one here, 256 up to 258 and some change. So we got those fair value gaps. They're going to be magnetic. They're going to suck price back in once we get heading back up. And we also have the order blocks that rest in all the swing highs. Plus we got, the potential of a retracement. Let's just say this is the bottom. I'm not saying it is, but we could be looking for 236.65. Even if we're going to head lower, could be looking at 243, could be looking at 248 as far as our fib levels go. If we're going to catch a bounce, could see us get back up to equilibrium without taking, kind of back into this congestion or consolidation range, right? Without actually taking these highs, we could get stuck in this fair value gap and then see price cycle back down. So totally possible. Now, if you see price start creeping back up here above equilibrium and back into premium price, that could be an indication that you might go short on a more long-term position. So that would be what we're looking for if you're looking to go short. And because we're already down here in discount, you're not looking to take long trades short at this point. You're looking for price to come back up above 236.65 before you take a long-term short position. If you're looking to go long in shares or long-term options, this would be a good spot to average in or take a position. And then we would look to average in again below 195. And then beyond that, you'd be looking to average in probably if we got down to like the 160, probably in this range here, like 165 down to 152 would be your next spot that you'd be looking to add shares. If you're looking at, something like leaps, again, this isn't a bad area to get in. As we might find support in this order block. We might just come down and swipe this liquidity and then start to rally up from there. Not sure that I expect that we're going to come all the way down to 150, but it's entirely possible. So we'll just have to see. This has been a low resistance liquidity run here where we haven't seen much bounce or much coming back up to anything meaningful. So you can see we've only hit that trend once, kind of missed it here, came back up and hit it, haven't hit it again. So we could say that, if we break this trend line for more of a swing type of trade, maybe a couple weeks, couple months out, break this trend line, see if it wants to come back down and back test it, then see it rally out from there. We'll be looking for a smart money reversal at that time to see if we get it. What would a smart money reversal look like? A smart money reversal would look something like this. Set a low, took the low, okay, rallied up, and then we'd want to see something like that. Okay, we'd want to see a higher high and a lower high, a higher high relative to this high, and then a higher low relative to this low. Okay, I mean, it could come back deeper. It could come back and look like an inverted head and shoulders. Either way, we want it to look something like that on a 1 hour time frame, right? And then if we redraw that trend line there, okay, on our low resistance liquidity run, we might look for it to be something more like that. Break out of the trend line, back test in a perfect world, back test the trend line, and then we target, 235, 241, and then potentially even higher. So we'll just, we'll be watching that to play out if you're looking for, something more along the lines of a long swing trade. Let's drop down into some additional time frames. We'll check out the 15-minute for the day traders and scalpers. 15-minute is going to be your intermediate time frame that you're watching as far as liquidity targets go. So you can see on an intermediate time frame, we're inside that larger order block. Okay, we've taken a low here. We have not seen a change of character occur off of this top here. So on an intermediate time frame, we have not taken that liquidity. Now, if we do see this pop up, okay, and take that, that'll be a good sign. Give us a change of character. What we'll be looking for at that point on a 15-minute time frame, so we'll be looking for a fair value gap to be laid somewhere in there with a large 15-minute displacement candle. Okay, and let's get our tool out. We'll go back and look at the path. Okay, we come down, we took the low, we set a lower low. Okay, we want to see price take the the higher high here relative, then we want to see price come back down into what would be some kind of 15-minute fair value gap there. That's where we'll take our entry on a 15-minute chart if that's what you're trading, and then we'll look to target this original high here at 219, and then maybe even higher all the way up to 223.50. So obviously there's probably going to be some chopping back and forth here, where it's not going to be extremely obvious that we're ripping, or it's just going to rip face and do it very quickly. You can see the RSI is in our favor at this point. We set a low on the RSI, and we rallied up. We came back down the control line. Now we're below 50, but it's fairly flat right here. And so we will be seeing, if Friday into Monday, if we can catch a rally and we don't take this low of today of 208.72. We know that Friday is often a reset day as far as quarterly theory goes. And so if you look at Monday, or we were only open Tuesday here, so our range here to here. So if we measure high to low of the week, we could see if we could get back to equilibrium, which would be 216.13. That could be a target for tomorrow. That's definitely on the table. So we'll see if we can get back to 216.13 and reset this. And then from that point in time, I'd be looking for some consolidation into the rest of the trading day. So let's take these off here. We'll drop down into the 5-minute time frame. 5-minute time frame, we start to look at things like structure. So let's pop these up. So just looking at today's trading session, we gapped up, we saw a run, wasn't much opportunity to take an entry in here. We got our break of structure. We never came back down. There's no fair value gap here. This is all pre-market anyways. So then you get your open. Okay, and from open, right there, we just started selling down. We pop back up. So if you look at opening price candle and that moved down, we get a return to optimal trade entry. Right, this is in leading up to the silver bullet time macro, and in the silver bullet you get the sell down. So we had seen buy side liquidity delivered on. Here's an indication right here using our liquidity tool that we had already seen buy side taken in pre-market, and we started to fade, sold down, popped up right before silver bullet, optimal trade entry inside a fair value gap. Okay, that is a Smart Money Concepts ICT entry. You can see right there, perfect execution, nearly perfect to the to the wick on our 70.5 fib. Great entry, sold down from there, pop back up into another fair value gap and finish the job. You can see, and this is on a 5-minute time frame, right? So 5-minute, another fair value gap here, finished the job, delivered on liquidity on these lows here. Okay, and then from there we saw a little bit of rally back. So it doesn't matter what time frame you're trading, but you can see that there's definitely different indications. I like to say start with the 5 and drop down all the way to the 1 to see if you can find the entry that you're looking for. So if we look at that same thing on the 1-minute chart, right, on the 1-minute chart, you're still going to get that optimal trade entry with this move here. But you can also see in, let's see, candle opens here. Okay, we saw one more push back up into a pre-market fair value gap right after the break of structure. So this is where sometimes your fair market or your pre-market data can give you an early indication and you can still use it. Okay, so that would have been the sniper entry, right? As market opens, we saw that fair value gap right before market opened. 9:30 candle, dropped down, popped up into fair value gap. There's your short entry, right? And your stop loss would have been, back somewhere up in these previous highs, and then it ended up running down. You could have targeted gap fill right here. You could have targeted previous low, but it would have been a nice RVR on that trade if you did get it. But again, you get your cycle back from high to low here, and you can still see even on the 1-minute chart, we still get a fair value gap on the 1-minute chart as well. So you get your fair value gap entry leading into the silver bullet, and you get your optimal trade entry fib as well, confluence in the ICT setups, and you take a short entry there. Then as price delivers, you can see on the 1 minute time frame, there was a scalp that got called out in the Discord room, and I think we were looking at that fair value gap right there. Never really materialized, as far as coming back down to it. But you got an immediate second fair value gap. Could have taken that. And there was a short scalp in there. I think it maybe got about 10%. Wasn't a big trade. Obviously, the early morning sell down was the one to go with. But also, if you're not using all the elements of a trade setup, if you're not using all the elements or not following all the criteria for it, you could have seen this as well. This is before the change of character happens, but we get a low here, lower low, higher low, optimal trade entry. Okay, then you get your displacement confirmation. Your stop loss would have been here. You would have targeted, in this case, potentially symmetrical swing, order block up here, fair value gap in these candles. Any of those are going to be targets. They're all in the same area. We hit it all. From that point in time, we sell down a little bit more, and then you could be looking for, if you weren't taking shorts and you were again still looking for longs, we have change of character here. We have additional fair value gap, bullish fair value gap there, and then we get another fair value gap here. So you get two different entries on that one. And then ultimately ends up running up above previous highs, which is kind of like what we're looking at. Okay, and then if you had this fair value gap here, you can see we ran up and hit the fair value gap. So all different ways you could be looking at ICT smart money concepts and using the different concepts that are taught with ICT for your liquidity targets, for your entries and exits. But we continue to show you how to use these tools on Tesla, as well as we took a number of other trades in the Discord today, including AMD, Meta, and some SPY. We had a SPY at the end of the day go for 80%, but nice trading day nonetheless. So appreciate all the support that you guys have for the channel. Don't forget to like, subscribe, share with all your friends, and take advantage of the 30-day free premium code that we got. Link is in the description below if you're interested in that. But we'll see you guys on the next trading session, and good luck tomorrow on Friday with the 0-day expiration contracts. Should be a good one.